Yeah, good morning everyone and welcome you all to the Bharat Fintech Summit 2026 by the Digital Fifth, and good to see you the faces in the morning to get started, right? So primarily I think we spoken about that, right, say how the credit is transforming, right, with respect to availability of the multiple data sources, how the transformation is taking place across the journey layer, right? And now here, that's primarily we'll talk about that how the architecture is going to evolve. And it's very difficult to predict about the technology in today's world, the way it is moving pretty fast, thanks to the AI, all the development is taking place. But we'll try to explore, and this is kind of our thesis, that how this the tech architecture for the lending stack, be it on the loan origination system, loan management systems, and the BRE and engine, that whole going to be changing. So just quick introduction about our firm. We are the digital firm. We are the India's homegrown consulting firm. Primarily we focus on the deep engagement, working very closely with the customers, not only the advisory, but advisory which can be get executed, right, pretty well within the organizations. We are kind of the practitioners, all the guys, senior management, the founders, all coming from the experience of working with the banks. So that's where that we bring in that experience with our advisory. I'll not take much of the time, but primarily we operate from the space of the strategy, governance, helping into the execution like program management in the transformations, kind of the programs that will be leading into that. We help into the product design, product journeys, product development, kind of the roadmap, working very closely with the bank and NBC across the different product, be it on the credit card, loan products, and rest of the thing. And we do lots of the work on the risk and compliance, like be it on the any RBI master directions, helping them bank on the DPDPA compliance. Those are the various elements. Just quick a snapshot about the banks. So you can see that largely we have been operating in the banks and NBFCs. NBFCs, it could be from the banks, the smallest finance bank, to the mid-sized banks or the large banks. Just a snapshot. So I'll just immediately touch upon that topic and before taking much of the time. So I think the credit, if you look at it, is evolving pretty fast in the industry, right? In the last 10 to 15 years, we have seen the kind of the transitions taking place in the credit, largely because of the kind of the digital public infrastructure has been laid down, that API infrastructure, API evolution has happened. That has largely changed that. But still, there are lots of the challenges still maybe pertaining into the credit, especially for the thin file customers. If you look at it, MSMEs and all these things. And now there are multiple other factors which may be playing the role. How the technologies, the lending stack is going to evolve, which can contribute to the making that the processing of the loans pretty fast, right, at the low cost. That's where primarily the entire objective is, that how to look at it, that how the lending stack going to evolve, which can start helping them into the process to simplify the credit further, right? Typically, challenges are not across all the products. I think we'll see some of the maturity that has taken place in the personal loan category, right? In the credit card kind of the segments, lots of the thing has happened. But largely, if you look at it, the large ticket loans, home loans, loan against properties, MSMEs, still there are lots of the challenges to solve. Like, for example, working under the very fragmented data kind of things, right? Silo systems, still if you look at it, the LOS, LMS, BRE, everything will be working in isolations, right? Typically, we have seen the cases like when the LMS goes through the end of the day activities and any transaction get posted from the LOS to LMS, chances are very high that it may be failing the transactions, right? So that's kind of the situation. Very limited real-time credit data analysis can goes into the BRE, right? High cost to serve per loan, especially in the large ticket loans, MSME loans and all these things, the cost really becomes pretty high, right? And then maybe the rigid monolithic kind of the infrastructure that if you look at it, or the poor risk monitoring and the kind of the early warning systems like. So these are the typical challenges that you will find it that may be inherent to the incumbent infrastructure that you may be having, which primarily you have designed to roll out your different credit products. Just a generic view, right? And it's not in a complete exhaustive list of the lending stack that you will see in the market. It's just mostly representative, right? So you will have the loan against loan origination systems kind of the player, and that's also has lots of the transition has started phasing that from the monolithic to microservices kind of the architecture. The BREs are getting more intelligent, which can enable the multiple kind of the rules and the models can be created based on the organizational structure, right? Then you have the LMS. LMS is also getting pretty evolved. So, and then you will have the multiple other infrastructure like loan against lending as a service kind of the infrastructure, right? So these are the different infrastructure already exist. Why the tech needs to continue to evolve? Because one hand, the technology is definitely evolving pretty fast, right? I think we all have seen that last week itself, one technology tool gets launched and the market has major issues, right? And I don't know, I'm still trying to find out how to pronounce the word that has come, Sasoclips, right? So that's a very different challenge, right? And that's where how do you need to see that how the technology continue to evolve? Continuous regulatory pressures, because continuously regulatory dimensions keep on changing, right? Now the digital protection data bill has already been pushed for the implementation, right? Now how your entire the lending stack is going to take care of the consent layer that's need to be introduced as a part of the DPDPA, right? It need to get embedded into your infrastructure, into your stack itself, right? Then customer expectation, that's also continue to evolve, right? Many of the customers like trying to do a transaction or trying to buy and purchase at the midnight, and let's say for example, he's trying to buy iPhone 17 at that time, he needs a credit. The infrastructure need to make a facilitation that he gets the credit available, right? So customer expectation continue to change, and I think lending is expected to continue to grow bigger and bigger and bigger, right? So that's an entire view is there. So let's look at that. So just try to get a quick insight into what was this yesterday model, right? So like 10 to 15 years, if you look at the infrastructure, it was largely monolithic. So everything was embedded into one box. If in case one thing need to be changed, then the downtime was taken from the technology teams to make those changes done in the LOS or the LMS, and then you need to get moving. So that was the scenarios, batch processing, lots of the paper-based property and legal documentation is still on this side, lots of this still the paper-based, right? But only the difference is that files are moving in the mails. That's only the difference. But if you look at the today's, most of the tech solution provider has evolved pretty big way. Now they have gone into the microservices where, like, say, for example, on the KYC piece, in case if you need to make changes, you don't need to disturb the underwriting engine, or you don't need to stop the disbursement engine. You can still operate, right? That's the kind of the structure is getting evolved. But tomorrow, I think because the way the technology has been again evolving, it's going to be more composable kind of the banking infrastructure where that each independently working in cohesion with all the other components very closely, right? And I'll just try to showcase in the subsequent slide that how it's going to be working it out. Lots of the AI-driven autonomous lending process will get into that, right? AI will start playing at each of the interventions, right? So that's where that now lending will still be driven from the kind of the flow, but human decisions, how they're getting embedded, right? Now the system is not going to own the decisions. Decision is still going to be owned by the human, but how the human-owned decision gets embedded into the whole of the flow, that's going to be the critical as a part of this whole things. Now this is where that we'll just try to look at the visualization 3 to 4 years down the line that how the entire lending infrastructure. Now just imagine, many of you may not have seen or may able to correlate, like 15 to 20 years back, you had a different individuals, right? And file used to move as a paper, right? Now the sales guys pick up the papers, then he does the verification, then goes to the credit team, then disbursement team, like every individual working in correlations, right? As a kind of a chain, right? Now just imagine the same thing is getting reflected. Now today if you look at it, it's now the same file-based component is moving as a workflow in the LOS, like things are moving from one stage to others as a workflow. But just imagine that 15 years phenomena where that you had the individuals, now individuals getting replaced with the agents, right? Agents are nothing but kind of an AI components because of the making this technology is available so well, right? And it's getting matured. How it will turn out, everybody has a question, right? But I think it has a potential, and that's where that we are exploring on the potential, right? So you have an engine which is primarily taking care of the entire OCR reading, doing the KYCs, and there is a kind of the orchestration who is managing these agents. Now the agents are getting smarter, which can work in the correlation with each other, like multi-agents kind of the collaborations, like the earlier days when all the humans used to collaborate, right? One guy has a question, raising the questions to the sales guys, and sales guys responding back, right? Similarly, with the agents also going to play exactly that kind of the role, right? So you have the KYC guys, the legal, like for example, that's a cloud infrastructure by Anthropic, which was loud. Now it is a pretty well designed to analyze that legal components, right? But still some of the legal calls has to be taken by the So that's where that entire the legal bot plays, the disbursement structures comes into the picture, right? There's a bot which analyzes, like typical earlier when the individuals used to look at it, he used to verify that all the checklist has been completed and then he used to facilitate the disbursement. Now the bots is going to all those things. He's going to validate as per the checklist that everything has been done and all this modality has been put in place, right? Then same with the valuation, origination, different bots. And wherever any flags need to be generated, that primarily alarm is raised to the subsequent bot and that particular subsequent bot takes a decision. So that's the whole structure going to be there. So primarily, if you look at it, how the lending is stacked will be, I'm not going to take much time. So primarily, you will have the API first. So entire that API infrastructures, which is already there, right? I think everything that if you talk about, there is an APIs attached to that. Now you just need to primarily align these bots to work with these APIs very closely, find out that all the kind of deviations or anything, right? And then AI driven. Now look at the scenarios. Let's say, for example, home loan case. You have a property, there is an individual. Like one hand, you are doing the KYC for individual, then other hand, you are doing the KYC for the analysis for the property. Now, these all the individual as well as the property from tier 1 to tier 2, tier 3 cities, it will keep on varying. Now, can the AI design in flow in such a way as a different swim lanes that both the individual as the property is of the A class, it goes into the some kind of the green channel, while individuals and the property has some kind of the challenge, it goes into with the manual environment, right? So that's where the AI driven comes into the picture. I think it's going to move in the cloud because as we're talking about I think loans credit is going to grow, right? And the daily consumptions loan related individual loans and MSME loans continue to grow. So you need to have that kind of infrastructures available to operate into that, right? And building that infrastructure in the on-prem kind of infrastructure may be challenges, but I think it's continued to evolve, right? And then definitely it's the kind of the infrastructure that I was talking about need to have the low-cost model attached to it, right? You can't have that infrastructure which, again, add to the cost of the loan, right? One hand, you're trying to reduce that cost which can be passed on to the customers, right? And the last, not the least, but it is also important that how the entire the RegTech, how it is built in such a way that it can take care of any changes that comes into the picture from the regulatory dimensions and get immediately accommodated in the process. So that's where that entire lending architectures comes into the pictures. With that, I'll take a pause here. So we have a chief guest here. So Bharti, maybe I'll hand over to you. And thank you, everyone. Thank you for patiently listening to me.